Welcome to Trading Lounge and the US indices for Thursday, September the 15th. So there's no change in the story. We just need to continue to map out what we're doing and look for those short trades next. So we'll start from the bigger picture and just go through quickly the normal things that we go through. So we're looking down as the A wave here, then an A and a B and a C wave for the B wave, and then down for the C wave. So we're looking for a move off the low here and then down again to finish the final leg down through to here. Now it's also possible that this B wave here can be sitting in over here for that. And if that's the case, then we're going to have a deeper move down through here, but it won't be like that, in fact, because when a market comes down to the low here, it's going to bounce back anyway off the low to give it a bit of a double bottom and then go down. So we're not going to miss anything. So we've got this up here as wave B or wave 2 here. So this would be wave 1 here, wave 2 here, and then going down for wave 3 here. In both cases, the same structure is going to be in place. We're looking at this as smaller wave 1 here. We're looking for the wave 2 rally for Thursday, and then Friday and Monday and Tuesday to be the third wave here, the fourth wave and the fifth wave to come down here. And there will be some sort of support here for this. So unless it just gaps straight through for some particular reason or news event, we'll have to have a look, see what's on the calendar. But that's it. So let's have a look at the market as a bear market with this B wave here already in place over here for that. So in the 50K, so all the way down here for wave A, then an A and a B and a C for wave B, and then down for 1 and back for 2. And then here we'll also be looking, we've got wave 1 in play here now, and we'll look back for wave 2 in this instance here, and then down for wave 3. So it's this wave 3 that we really want to catch, obviously. Wave 3s tend to be the longest and the strongest. So that will be that, and yeah, so let's just cruise in. I won't go to the 10K because I've got a slightly different count on that, where we come a little bit higher up here for that and then come down, but that's not going to be the case because we've got an impulse wave coming down from the top here, so we don't need to go there, but we will go to the 1000 tick and start drilling in a little bit more detail. So we can have this top up here as a wave 2 or wave B. So the wave 2 is the alternative count, so I'm just going to shift that to the side. And like I said, it doesn't really matter at this point in time because we just want to be short here. And in both cases, you know, sometimes when we've got two counts are in the opposite direction, but in this case we've got two counts that are in the same direction. So that's, well, it's nice. So we're looking down at this structure now. So yesterday we talked about wave 1, and then we were looking back for wave 2 with an ABC correction. This B wave has come a little bit lower here. In some cases around the traps, it has come lower. In other cases, it hasn't come lower. But we're going to treat it as an A and then an A, B, and C here for that. And then we're looking for 5 waves up into the 50-60% retracement level. Will we get up here? Not quite sure. We should come pretty close. I wanted to talk about the bullish weekly cycle for a moment because in the bullish weekly cycle, we would see Wednesday being a V-shaped day. For Wednesday, we would see the market come down in the morning and then up in the afternoon, and then Thursday would be the bear day, and then Friday and Monday, and then be profit taking coming in on Tuesday. That would be the trend, but we're in a bear market, so the opposite applies. So as I mentioned yesterday, this Wednesday here in a bull market coming lower and then going higher was the opposite. So we had the market move up and then come down. And because Thursday is the bearish day in a bull market, it will be the bear market rally in a bear market, and that means that Friday and then Monday will be the bearish days. We'll see some short covering Tuesday morning, and then the trend resuming, and then we're hitting into the swing days again. The Wednesday and the Thursday become a bit volatile. I just call Wednesday and Thursday the days that take out your stops. And if you kind of know that, and you have to, of course, you have to prove things to yourself all the time. But once you get the swing of this, then you know you can start coming up with some solid strategies for yourself, like taking profit here or having wider stops to get through it, depending on how you see the market. So the cycle itself is playing out quite nicely. So normally in a bull market, when we get the Thursday coming down, we start buying Thursday afternoon, because what we start to see Thursday afternoon actually is we start to see the market sort of start shoring up. So yeah, for futures traders and those sort of folks, seeing that strength come in on the Thursday, but in this case we'll see that weakness come in on the Thursday. So this is where you need to start taking advantage of it and building in Thursday afternoon, Friday morning, Friday mid-morning, Friday after lunch, and so we just keep building in, and you build in a way that you can manage your exposure. And the way you can do that is obviously trade less, but also use the levels and the wave counts and indicators, whatever you're comfortable using, of course. This this little move up here, let's look at that in a bit more detail. Let's go to the 100 ticks. Okay, so just a reminder, we can have this as wave 2 here as well. It doesn't really sort of change much at this point. So we've got wave 1 here, the A, the B, and we're looking for 1, 2, 3, 4, 5 up here. This is the 50-60% retracement level. Will it get there? Don't know. Maybe. Maybe not. But the trick is that we need to count. What have we got in here so far? Can I just have a look in here? Pretty much this will fade off. One, two. We're pretty close to probably a bit more, but pretty close to having that wave 1 in play here, which will leave wave 2 pulling back. And wave 3 coming in, probably touching the top there. And wave 4, so how far will wave 5 go? Will it, because when we get to here, we've got the midpoint 50, but we've also got, it's yeah, around this area here, around the 4,000, we've got group 1, which is 1, 2, and 3. Normally, if we get a classic trading levels pattern sitting on top of number 3 here, then that will push us up to 5. So you can always watch that, and it takes, you need a bit of patience here for this one, because it takes a while there. The strongest numbers are 1, 5, 8, and then 3. Funny enough, according to me. Whatever that means, it's probably a bit flimsy, but this is the pattern here. So if you wait patiently, because if you're going to short, you really want to make sure that that's failed at the 30. If the market trades above the 30 and then comes down and finds the 20 as the retested resistance, if the number 2 becomes the retested resistance, then the market's going to be pulled back to the closest largest number, in this case here. So that's a good place, if for whatever reasons here this comes up into the 50-60% up here, then yeah, that number 2 there, that's where you can look to build in a short trade at that point. And then of course, if the market's been trading above the 4,000 and above the 4,030 up here, and then the 4,000 becomes the resistance, then you need to be looking on the short side. So you need to wait for the first move down and then the retest. The retest should be on lower volume than the previous trend. Put the short here and then the short here for that. So that means that you can short under here. And then when you're under here, then we've got group 2 here. So group 2 is coming from, say, from the 9 here will be 1, 2, and 3 is group 1. Yeah. And then we've got the 50, the midpoint, and then we've got, so it's 1, 2, 3, 5, and 8. So we've got 8 here. And then when we talk about 8, we talk about group 2, so that's 65, so 65 and 72, which will be there. And I'll just give that a splash of color because it gets a bit congested in there. It's just a design thing, but there's a lot of other important numbers in here that make up that group 2, by the way. But the thing is that when you see the market become the resistance here, as you can see that the 65 is reasonably important. When that 65 becomes the retested resistance, then you also want to be looking to add to the position at that point. Because what it's doing at that point, this is the swing range for the 4,000 in the initial swing. There's a bigger thing than this as well, but this is just subgroup. It's not subgroup 1, subgroup 2. It's not minor group 1. That's minor group 1, minor group 2 and 3 here. That's 1, 2 and 3 here. So that's something in the bigger picture that we would use when working with this. So but yeah, for the sake of shorting, because we're in this particular space at the moment, so we're looking for 5 waves. If you can count 5 waves up here, then you know that you've got your top in play, because it might just come to here somewhere. We're looking to short it here. This is the 30, 40, the 30, the 50, 60, 1.8% and the 50%. But you might want to bring that down into the 2 here, just below the 2, But if you're going to short in the box up here, if you normally short 10 contracts, well then just put 1 or 2 in this box, and then start to build in down here. And the reason for building in like this is because you can manage your initial risk and your exposure. Better to do well, look, everybody's different. I'm a bit of a scaredy cat, so I like to feed the beast, and in the right direction, and as I have more confidence and keep sort of moving in there. But I like to manage, I only like to have a certain amount of exposure per trade, So, but everybody's different, It's about managing the risk. The trend will take care of itself. But if you overtrade, then you've got to put your stop too close as well, and that's always a problem. So the other thing that I wanted to point out too is that this move up here is going to be 5 waves, right? So once you build in here, if you also need to understand that when we come down here again, coming into these lows here, we will need to look at this also being wave 1 here and wave 2 over here as well. So there's going to be another counter trend rally coming in here. So there'll be some sort of, shorting down here is not such a good idea in the initial stages. You need to let it mature. It's going to come back up and retest group 2 here, and this is where it can fail at this point. And there'll, this number 9 here is doing it all here as well. So you can look to short this box in here, that 50-60%, if I can just push that in there a bit. And then when I copy that here, there's also going to be another little 1, 2 in here as well. There's going to be a series of them, 1, 2, 1, 2s and 1, 2s. And yeah, so, and then you can also look to, once that becomes the short position there, because you can start bringing your, once you can recognize that you've got wave 2 sitting here, then you can bring your stop down on top of that. And once that wave 2 comes in place, then you can bring the stop at the 2. But I wouldn't bring your stop onto this one here until the closest largest number has become the retested resistance here, and then you're building into the downside there again. So the trading levels, or using the price and Elliott to to enter, because you really want to kind of just be shorting the tops here. But you can only short the tops if you're confident that the market is going to go down at that point. So anyway, that's enough waffling there. And so the NASDAQ's the same as well. We can just look at the wave 1 here with an ABC. It may or may not reach the box. I think I brought that down a little bit further. Very small amount up here. Do not overtrade up here. I don't want you blaming me for anything. So so yeah, and then also group 1 above, group 2 below, all the 1s and 2s, those bounces that are going to come into play. So less is more, I mean, there's a fair way to go in all of this. So and you don't want to be kicked out, you know. And we also need to decide if we're going to be holding through this wave 3 and 4 here as well. And also too, if this is wave 2 here, if this is going to be wave 2 rather than wave B, then this third wave here is going to be longer. Okay, so just moving on a bit. So this is the Russell ETF here. So you can see in this case here that this move here hasn't come back and made a new low here like it did on the SPX, on the S&P. So it's held above here. So we can look at this as the A, the B, and the C wave moving up here with 1, 2, 3, 4, 5. So that's how that's sort of playing out. And here I've just drawn it out just to give you a bit of an idea, which, you know, to get a small position here is good. When that comes back down to this level here, it's going to bounce. So you could short the bounce. You could put it under wave B to short it under wave B. But then again, in the bigger picture coming down to the 180 here, the top of minor group 1, minor group 2, this 5 waves here is also going to give a bounce. So shorting it down here is only going to get you into strife, because it's going to come back, it might not come back that high, it might just come back to the 183 area, and then go down again. So it's like a ball bouncing and checking all the time. So you can short under all of these here. You know, under the 80 you definitely want to be shorting. You can short these tops here, you can short these B waves here. So you can do this if, you know, the other thing is to look at the side over here and go, well, Pete, why don't I just put one contract at each full point here? I mean, that's a fantastic way to go as well, because you're just sort of dollar cost averaging, and it's not the best trade, but it's certainly not the worst either. You know, it kind of gives a bit more balance, and that way you can't get upset with yourself, you know. So, but that's the ETF, and the futures is the same here as well. So we'll be looking at this here being wave 1 and 2 in here, and 3 will probably be at the midpoint, the 50, 5 being the second strongest number, and then fading into these. I've got this just below the 65 here, so at the 65 you can pretty much start looking at it. And what you want when you think you've counted 5 waves, when you've got that first move down and the move going to move back again, that's where you can get that you know, that's telling you that something's, you could get trapped on the 4th wave here for that. So that's why we do it this way, because that way it'll just keep going up in case you got the count wrong. But if you put that under there, then, you know, you're setting it up at that point. So see how you go with that. And the DJ, so the DJ has put its B wave below here, but I'm still going to look at it like this as an A and a B and a C, and would also look at this as 1 and 2 coming into here, and 3 and 4, and will it get all the way up here? I just don't know. I mean, I'm not very good with targets, you know. I know about numbers, and it's a numbers game, but putting targets, putting expectations in, having expectations and opinions, I know that they just get you into trouble. So better just to count the structures if you can, you know, and put your faith in your own trade setups. And if you don't take your own trade setups, then just use less money, you know, a lot less, and then you can just do it, you know. So that's that. All right, sorry to waffle on so much, but I think this is kind of important, you know. This is why I'm putting a little bit of time into it, because we've either got wave B or wave 2. Not that there's a big difference, but it does give us an opportunity to bank some money coming down here if we get this, if it's right, do you know. Some things don't always go according to plan as well. I mean, wave 2 is normally very simple. It's normally a 5-3-5 structure. So it's normally quite just simple and good to go. And then we go to them. Obviously, that's going to bounce off these lows here, and that's going to give you another opportunity to short at this point, and then come down. That's going to get trapped under here. That's why I've got that under the low there. That you don't want to use it there. You want to use it over here for that. All that sort of stuff, you know. Anyway, yeah, all good. So yeah, it could pan out quite nicely, but you know, something could go wrong as well. I mean, maybe I've got this wrong. Maybe this is just the A wave and a B wave, and we go back up here for a C wave and then go down. So that's why it's good not to put a lot of money into it, you know. I mean, if I got short in this area here, and that's the 61.8% at the 38.2 here, I would not get out of this trade unless the 32 became the tested support. And for the tested support, it would need the arrival, the reaction, the first high above the level, and then it would have the ABC pattern here, like this. So I would wait. I wouldn't have a stop in until that top came in. Then I would have my stop in, and then I would move my stop down to that point there. And then if it got triggered out, well, then I'm a loser, and I did everything right at the right time. And if it's going to stay in, well, then that's going to stay in, and then it's going to move on down like that, you know. So a bit like this over here. I mean, this is obviously an uptrend, but the arrival, the reaction, the first high above the level, that's where I'd put my stop at that point. And if it took that out, it takes it out, you know. Or it could be like this. I wait for the first high above the level here, and in this case it hasn't, you know what I mean. So, I mean, it's a bit obvious that we're in a bull trend at this point, but we could have been obvious here. We weren't sure here, were we? We're kind of looking for it to go down further. So this is the same thing here as well. So it's just a little thing, but it's a big thing, you know. And anyway, it's how I do it. And I'm just here to share a few things, but it doesn't make me right or wrong. And there's always room for improvement, as my wife keeps telling me. Alrighty, cheers.